We had Amiram Levenberg, who joined us later, who was the CEO of Gilat, another Israeli company. So I think without the help of these people, it would be very hard for us to get to where we are as quick as we can. And one thing that is very, very important, and it's very often overseen, is when doing seed rounds, we need to keep the company structure very simple and very fair. So getting into overcomplicated structures usually will be very difficult for the company going forward. So when you move to the A round, when we moved to the A round, which we'd done just a few months after finalizing a large seed round, we realized it's a completely different game. First of all, there's a completely different set of requirements. The company being seen by venture capitals in a very different eyes than from seed investors. It's also a very, very important question is with whom you want to go. You want to go with someone who is a banker or someone who is a doer, who's done a startup, who has built companies, or someone who knows how to bring more money. So that's an important decision. And you need to know if you want to raise it here in Israel, you want to raise abroad. And this is kind of recommendations based on our experience. Number one is you need first to understand your direction. You need to know where you go as a company and how much more capital would you need and who should be your investors going forward. So that's very important in identifying who is your Series A investor. You need to always choose your investor. You should never let investor choose you because you need to know with whom you're going and where you're going. It's very important to raise capital from the position of strength, especially in the cases when the company is on the brink of a bankruptcy. It's hard to get investment, and definitely not in the good terms. At the same time, when you just finish round and numbers are good, it's a very good thing to raise, which is kind of counterintuitive. You need to prepare a lot of materials. It took us months and months to actually prepare all the materials we needed for, not only for the due diligence, but also for the pre-deal due diligence. And something else that is very important is to understand the market. One of the advices we actually get from the board members is before raising locally, you need to go on the roadshow in the US, in Europe, and understand how investors are looking at you, what is the right value for the company, what are the perspective of the investor, and that usually helps you to identify what you want to achieve. So to summarize, we just announced that we raised 6 million a round. We raised it actually from the Australian VC. I know it's not represented here, but the interesting thing about the Australian VC was it was built by Dur. It was built by someone who established and built a company to $6 billion worth. So he knows how to take company from where we are today to the next level, and it was very impressive for us, so we thought he's the right partner. And something that is very, very, very important, again, one of our investors told us that VC industry tends toward overcomplicating deals. So the legal terms, everything is too overcomplicated. So I think it's really, really important to keep things simple, straightforward, and fair. Fair for both investors and the entrepreneurs. And I think when the deal is not fair from the entrepreneurs from the very beginning, it's also going to be very difficult for the investors for the company to do successful rounds in the future. And I think it's a common interest. So the deal is fair from both sides, and the next investor would appreciate and would continue the same tradition. So I think that's about it. Thank you very much.
Thank you, Victor. We see the EU-Israel convention needs to be enlarged and to expand to Australia. Yeah. Well, pretty close. We do have a second entrepreneur on stage, someone who has made very different experiences, and so please listen to Chris Yerbey.
Hi, my name is Chris Yerbey. I'm the CEO of a company known as Scrap Connection. We're based in Amsterdam in the Netherlands. So my story is just kind of the opposite in a couple of different key ways from the presentation that you just heard. I was invited to speak about my funding experience, which would be probably better described as kind of a slow and maybe even at the early stages a non-existent funding experience. I think I have a unique perspective because I've been an entrepreneur for 18 years. I've had 6 startup companies. 2 of those have been tech, and 1 of those is in the U.S., and 1 of them is in Europe now, the one I just started. So I think it's important to give a bit of background about myself, also our team. I'll tell you a little bit about what Scrap Connection is, and then I can go a little bit into what our track record was, how this whole experience was for us. So my background is in the recycling industry. So let me first say Scrap Connection is a platform connecting scrap metal recyclers with their end users, mostly in Asia. With 15 years experience in recycling, 6 or 7 years experience in importing and exporting scrap as a middleman or as a broker, have quite a bit of experience in those areas. Also I have the previous technology company was again a niche market, niche type web-based marketplace. So I had these skills and these experiences basically when I came up with the concept along with my partner in India about this platform for connecting buyers and sellers. So basically this was inspired first out of I guess the complications that we witnessed in with scrap metal trading, just in getting in the industry as an outsider. We decided that we saw millions of dollars being lost every year through within this industry, and we saw a way that we could fix it. So in 2011, right around the end of 2011, I did some early research with the market. I checked with customers to see if there's a demand for our product. I checked to see if there was demand within the investment world for this type of solution. Finally, yes, everything was a go. So we started the company in the beginning of 2012, and right from the beginning, we started developing the technology. And I went and with my team applied to an accelerator program located in Amsterdam known as Startup Bootcamp. We were the first pick out of 525 applicants to join their program of 10 spots. So what was quite perplexing to me is that we were the first company to be chosen, but the last one to get funded. So it took us a full year and a half to get our funding. And it took me quite a while to try to understand how that was possible, because with all this validation from customers and also from our from investors and feedback from people within the I guess mentors around the program, it seemed like it was a kind of a no-brainer. But what I've realized, and that's really what I just want to share today, is what I see. At least I speak specifically about the Netherlands when it comes to the angel investment situation. But of course, I know that there's parallels to this all around Europe. But I've also been, witnessed a bit to the VC side of things. So basically, we're a company that fell in the cracks, kind of in the middle of the desired type of company to fund. We are a startup company, yes, sure, but we were pre-revenue, we were pre-product launch. We actually launched our product right after demo day, definitely pre-traction, and so the angel investors that I've come across, and I met with many, they want to ideally invest in companies where they know that they can add value, and that's understandable. But when you're talking about a marketplace that's in the scrap metal business, it's probably not as many people that are comfortable with the scrap metal industry. And then the VCs, when they looked at our business, say, which is normal, we were too early, way too early for the type of investment that VCs are looking for. We're trying to raise $400,000 to $500,000 at the time. So what I feel was missing is what I see in the U.S., which is where you have more professional investors, either super angels or VCs that are moving in towards the seed arena. People that are able to look at the track record, the experience of the team, and basically make an investment, which I heard today a $300,000 or $400,000 investment is quite small compared to the investments of the past to get a company to break even or to show traction. I think that's missing, at least in my experience, and from what I've heard also from other entrepreneurs in Europe. I think we need more of a push towards this type of model in the U.S. where you have more sophisticated investments, investing on teams, not just on the revenue attraction. If your angel investors in your ecosystem are only interested in mostly investing in growth companies, well, I think that's kind of a problem. So that's my perspective. I should say, I guess since that point, it took us. We were a year in after demo day. So month 19, as I recall, we were funded by a local investor who did understand marketplaces, and obviously things have gone much better since then. That's the good part of the story. But I feel like, unfortunately we lost a lot of time, and I think this situation might also lead to the reason why some of these earlier companies that I've known, including ourselves, have looked at going to or have moved to the U.S. to try to take their idea to another area. So I would like, as a European now, having lived in the Netherlands for 5 years, I'd like to see that change. So that's my story.
Thank you for your tour de force. In Germany, we're going to see the IPO of Rocket Internet later this year. This will be the biggest floating since 2001, the end of .com. And it's very much in the business news. Is this showing, again, the end? Or is it a new beginning? Who of you knows Rocket Internet, is familiar with the name? Okay, some. Who of you intends to invest? Okay, I'll explain, and then you take a decision. Rocket Internet is the dear project of three brothers. The three brothers at school time, they decided to become entrepreneurs, but they lacked ideas. So they traveled, when they finished business school, they traveled to the US to see what's happening at the end of the 1990s. And they loved eBay. eBay was then a true and pure North American concept, and they thought, that's fantastic, we should have had that idea. And initially they copycatted it extremely. So they plagiarized everything, learning, doing it in the same way. About a year later, Alando, that was a bit like Aladdin, which was, again, a bit of stealing. There was nothing new, it was eBay pure. eBay decided to go global and to invest into Germany. And the question was whether to start from scratch and disregard Alando or purchase Alando. eBay did what, in the end, smart minds told them: purchase them, although you may hate them. So that's how the Samba siblings made their first millions. They invested into Jamba, which I thought was wild, but I was the wrong target audience. Jamba was the little song tones for your Blackberries, for your Nokias at that time. Very successful, sold it, invested into Facebook, was not a mistake, invested into Groupon, was not a mistake, and then they decided that they would never have a smart idea of their own. But they're very good in picking up smart ideas and make them global. So what Rocket Internet is now doing is they're looking for proven business concepts in one part of the world, regardless of where that part of the world is, Mongolia or Argentina, Rwanda or Papua New Guinea, it doesn't matter. And what they promise to them is that they will evaluate whether that product, whether that idea will work everywhere else. They could become, if successful, a new venture capital concept of a very different kind. Is that going to be successful? They're just giving away little money, 750 million euro. They're keeping the main money for themselves or for Kinnevik, which is a Swedish private equity house. You're probably familiar with that. So the question is, will the world of venture capital funding will become very different from today's? Will scrap going for American money be just a pioneer of a wave to come? Well, that's going to change. And I've some other panelists who've already pioneered and have crossed borders. And so just to my left, Itzik Frid is there, and I would like you to introduce yourself and let me know, do you believe in Rocket Internet? How is the world going to look like?
Hi. Should I introduce myself first? Hi, my name is Itzik. I'm the managing partner of Takwin Labs. Takwin is a new fund that was structured by two of the leading Israeli venture funds, JVP and Pitango, Chemi Peres, actually in person. And the third party was Imat El-Khami, a very successful industrialist. And the goal of Takwin is to invest in Arab entrepreneurs and also to spread outside of Israel and to build branches across the region in other countries. And the idea is also not just to give money to the companies, and this relates to Rocket Internet to some extent, but to help them build the companies, because we came to the conclusion that the entrepreneurs, the Arab entrepreneurs in Israel, we have a huge talent base, but this talented group does not have access either to venture funding, and they do not have access to the ecosystem that Israel is so proud of and so strong of, and which was discussed earlier. So we're talking about 20% of the population. And just to give some idea about this group of population, today in our leading technical institution, the Technion, 20% of the students are Arabs, which reflects their portion in the population in Israel, but over 30% of the cum laude students, the excellent students, are Arabs, meaning there's a lot of ambitions there. To some extent reminds me of what my grandfather told me when he grew up as a Jew in Europe. The Jews needed to excel in order to become equal, to some extent. Now, as to Rocket Internet, one of the interesting things about them is that they say in their site, we're not investing in companies, we're building companies. To some extent, we're thinking about the same way, just giving money to entrepreneurs, especially in developing countries, where Rocket Internet is going to, is throwing good money to the wind in most sense. However, localization is a very challenging aspect. We, as a fund, are not looking to take great ideas that work in the West and to localize them in the Arab market. We are looking to invest in great people that will know how to do the job. If it requires localization, let them do it. Their model is very unique, and I think they are an exception that shows the rule. I can tell one business case that I suffered from, and you learn from your lost battles more than you learn from your victories. When I worked for, I'm sorry, I didn't introduce myself in my history. I studied physics before my army service and law after, and I was the senior advisor of the Minister of Finance. I was VP Business Affairs for AOL, a partner in ArgoQuest holding company, and I was also the CEO of Momenis, a company that has 80 million users and develops mobile platforms. And when I was working in AOL, ICQ was at its prime. We had 250 million users, and it was by far the strongest instant messenger in the world. And one day somebody came to me and told me, listen, we see a company in China, a tiny startup in China that is called OICQ. Should we take their name from them because we own the brand? And we looked at it, it was a ridiculous copy of ICQ, same ringtone, same everything. And of course, we took their name. A few months later, they come back to me from the legal department and they tell me, guess what? They're still on. Now they're calling themselves QQ. And why did they do it? If you ever used ICQ, the ringtone is QQ when you got a message. So we took their name again from QQ. Today, this company is called Tencent, and it's one of the 20 biggest internet companies in the world, in NASDAQ. It's huge. And it taught us a very good lesson, because why did we lose the battle to OICQ in China when ICQ was running so strong? We lost the battle because they knew how to localize better than we did. Just copying something and doing it locally is not the good way to go. You need to really understand the mentality, and it takes a really unique expertise. So Rocket Internet, I take my hat off to them. They're brilliant, and they did a brilliant job. But I would not recommend to any of my colleagues to fall in love with this idea too quickly. It's too risky.